So today's project that I'm going to talk about is Credify, DeFi lending marketplace where real assets meet crypto. Okay, so about the project, Credify is the world's most advanced crypto peer-to-peer lending platform that combines the best practices of DeFi and traditional finance. Our hybrid mechanism solves real-life problems and inefficiencies of the conventional banking and financial sector and provides unique opportunities for both borrowers and lenders. Credify allows platform participants to invest in credit portfolios, individual credits, or do trade finance directly through their personal wallet, banking redefined. Okay, so what they want to do is the first thing that they're going to do is passive income generation. So in this play, the token holders will have the choice to invest stable coins in different portfolios depending on the risk they are willing to take. The platform will provide risk assessment and credit score data to the investors, hence giving them the means to make an informed decision. The platform guarantees minimum 10% return on annum or more, depending on the risk appetite of the user. The second phase they're going to is lending and borrowing. Credify will take full advantage of the decentralized finance capabilities of the blockchain with direct peer-to-peer finance, liberalizing the process of lending and borrowing by connecting the willing parties worldwide. In addition to the collateralized loans, Credify platform will be able to provide zero collateral loans on a case-by-case basis. This is unheard of. Providing zero collateral loans is, you don't really hear that. There is pledging in traditional finance where you pledge a certain amount in the bank account. If you want to take a loan, to buy a property, they will just see that amount of money there, maybe 2 times a year or 3 times a year, and they'll allow you to take a loan. But zero collateral loans, I think it's one of the first. I think it's something to look at. Trade finance is aimed to combine traditional banking instruments with the aspect of decentralization, offering the full length of services to its customers. Credify will introduce trade finance to its offered services. Lenders and borrowers will be able to not only meet in a deal but also underwrite a letter of credit or a letter of guarantee, as well as factoring services. Wow. Okay, so these are what traditional banking does. You want to lend. Okay, for example, if you're a business, the bank will confirm that the other party has money, send you the letter of credit, and then you send the goods over, and then you get your payment. So that's how it works in the traditional banking system. So they are trying to definitely, I can guarantee you, there's a bank behind this. The bank wants to make money, right? Very simple. If they want, let them. Let them make money. It's a matter of time before they come and step into DeFi. No one can stop. It's decentralized, right? But we need to make our money here. That's very important. Okay? It doesn't matter who comes in, but we should be making our money. Because the banks have been looting us for a long time, but it's time for us to make money from them, right? So these banks, how they make money again is very simple. They borrow, they give you an interest when you put a deposit, which is pathetic. And then if you borrow, they will charge you an interest that's enormous. So that's called a spread, and that's how they make the money. So they give you put your money in the bank, they give you a little interest, but when you borrow from them, they charge you a lot of interest. So that's the banks. They can do whatever they want. You put $100 inside, they can magically create $1,000 out of the air, and it's legal, guys. Right? It's legal. They can, for every $100, right? They can make 10 times, 15 times, 20 times, God knows how many times more. So this is the thing that I don't really like traditional banking coming in, but I can't stop this. We can't stop this from happening. But this is a good idea for us because this could take off, right? Because the banks want in, right? So yeah, so it's very simple. Like, you register on a platform, you own some Credi, request a loan, and there's a funding agreement, and then you get platformed by finance users, and that's it. And then if you you can do whatever you want with the money, right? But you got to pay it back, lah. So that's the thing. So this is the roadmap. I'll come to this later in a while. And so the P2P lending phase 2 is in August. This is important. November is the phase 3, right? And I think phase 1, they are ready to go. If I'm not wrong, they should be ready already. I'll come to this later in a while. I just want to show you something. I just want to highlight a few things because this is important. So in the tokenomics, I will just cover it briefly. I'll just let you know that there are two tokens in the system. Okay, one is Credefi, which is an inflationary token used for rewards on the platform, and the X Credefi, a variable supply but deflationary in the long run. So this token is created by burning Credefi and stabilizing the Credify ecosystem. Okay, so Credefi token is the main token used for rewards on the Credify platform and token used in the token sale. Credefi has a perpetual inflation of 5% based on the initial Credefi token supply. This means that an equal amount of new Credefi will be released into the system each year, meaning that the percentage year-on-year inflation will decrease over time. Okay, this inflation will be split between users who provide lending liquidity on the platform, liquidity providers for Credefi on Uniswap, liquidity providers for X Credefi on Uniswap. So the main utility function of Credefi is to act as an additional security layer for the loans issued on the platform. Users who wish to obtain X Credefi will need to deposit their Credefi in the Credefi security module. Okay, any Credefi which is available in the module can be used by the Credefi platform to remunerate lending liquidity providers in case a loan on the platform goes into default and liquidation, that collateral proves insufficient to cover the loan principal plus interest. So this acts as a protection layer. Okay, any Credefi which is available in the module can be used by the Credefi platform to remunerate lending liquidity providers in case a loan goes into default, right? So they can use Credefi. So this pool will be there in case it's insufficient, the collateral is insufficient to cover the loan principal and plus interest. They can use this. So it's for the security, which is good, right? X Credefi is obtained by depositing Credefi in the security module. Any Credefi deposited in the security module is subject to 10 months vesting at the rate of 10% per month. As an example, if a user deposits 1000 Credefi in the security module and the current Credefi over X Credefi conversion rate is 1:1, the user will get 100 X Credefi per month for 10 months. Any Credefi which is not yet converted to X Credefi is unusable by the security module for system stability. Okay. So just know that there are two platforms, and one platform is used for rewards and the other is used for stabilizing the Credify ecosystem. Okay, so another thing that I want to explain to you is now, so there are three phases. Okay, so the phase 1, as I mentioned earlier, okay, any Credefi token holder will have the right to lend in DAI USD or USDT stablecoin on Credifi's platform and earn interest on them for the duration of the loan contract. The participants on the platform will have the choice to invest in different portfolios depending on the risk they are willing to take. The platform will provide a risk assessment and credit score data to the users, hence giving them the means to make an informed decision where to invest. Furthermore, by lending on the platform, they will be rewarded as described below in the token allocation section. Okay, so what happens here? You are a lender. Okay, you send DAI to the platform. Okay, and then the platform has a financial institution to do that portfolio for you. Okay, so it makes a credit portfolio, and if it's performing, okay, fine. You get your repayment, a minimum 10% interest, and your repayment back, right? They will send it to you. But if in the case where it doesn't work out, not to worry. The financial institution is there. If it doesn't perform, it goes to court, and then the court decides, and then there's a collateral liquidation, and it liquidates, and it goes to the financial institution, and the financial institution will repay you back. So it's pretty, like I said, I think there's a bank behind this, there is a financial institution behind this who want to get a pie, a piece of the DeFi pie, and let them get it, as long as it's safe for us. And looking at phase 2, lending and borrowing, phase 2 will take full advantage of the decentralized finance capabilities of the blockchain with direct peer-to-peer finance. So there's a difference. So in your phase 1, there was not P2P, it was not peer-to-peer. You lend money on a selected portfolio, you choose your risk level and go. But this time in phase 2 is different. In the second phase is a bit different. It's peer-to-peer now. It liberalizes the process. Liberalizes the process of lending and borrowing by connecting the willing parties worldwide. Wow, okay, it's worldwide. Okay. Once a project request for loan is uploaded, the platform will perform a risk assessment and review of all the legal framework related to the case. The analysis will first ensure the legality and regularity of the idea, then measure the project's sustainability and probability of default, recommending the percentage return of the investment that is suitable to be asked from the lender. So they will decide. The platform will do a risk assessment. They will see, is it worth or not, and can we do this or not? Is it legal in the first place? Whatever that the borrower wants to do with the money, and see whether it's sustainable. If they are going to give a collateral or not collateral, because they said that there will be no collateral on a case-by-case basis, and then they will give you a recommendation on the return of the investors. So the lenders will see, okay, I can earn this much on this thing. What's my risk level? So then the lenders can decide, whether to invest or not directly. And one thing I like about this is Credify is that the investments will be legally protected in the form of a credit loan designed by a team of professionals and a licensed financial institution registered in the European Union. Okay, I like this. I like this. It's good. Yep. Okay. What else? Yeah, this is the peer-to-peer, the phase 2, where you directly borrow, right? So if you're a lender, when the contract is approved, so the lenders sign a contract with the platform, and then the platform here does the risk assessment, and then it proposes a loan to the lender. The lender says, okay, I agree or disagree. If I agree, okay, I send the money to the borrower, and then the borrower repays interest, and repays the loan together with the interest to the lender. So you can see here, it's fairly simple. I'm not going to go to the trade finance. So guys, I think this is something that you should look at. Let me see what else I should be showing you. There's a lot of pages here. Yeah, so if you look here, let's do a comparison, right? A quick comparison. If you look at no, not this. Wait. Just hold on. So if you look here, right? If you look here, the borrowers. If you look at Credify and the competition, okay. If you look at the competition, is high collateral requirements, okay, but Credify has a lower collateral requirements due to high level of risk assessment. Like I told you, the platform does the risk assessments, right? The competition has limited choice of collateral options, but Credify will have a wide choice of collateral options. They will be, because like Maker, for example, let me give you an example like Maker, right? Maker, you only can put crypto as a collateral, but here maybe you can put a building as a collateral, something physical. Okay. The competition has fluctuating interest rates. Credify have fixed interest rates. Competition has no private keys. Credify is non-custodial. That means you control your keys, right? Competition has regulatory issues. I think maybe it's like Celsius network and all that. I don't know whether they have but I heard that they have. But Credify is legally bootstrapped. This is where guys, that there is some financial institution that is legal, that that wants to come in, and I just feel it's like that. I think so. you know. So, and slow and difficult process if you're with the competition, but Credify is fixed and easy. I don't know about that. I think Maker is easy. So yeah, guys, please take a look at this project if you like it. Do take a look at it. Just let you know that the public sale is a 42 days time, and there is a private sale. The good news, yes, the good news. Before I go, this is what everybody wants to hear. There is a private sale, and 10 million Credi will be offered, and one Credi will be at 7 cents at a 30% discount, and there's no limits. Okay, private sale, guys. I'm trying to get an allocation. If I can get a big enough allocation, I will let you guys know. You can come on board, join my Telegram channel. If I get any allocation, I will be posting it there, and then let's make money together. Okay, so the public sale, if you don't want to go on the private sale, if you want to go on the public sale, they're offering 110 million Credi, but the Credi is one Credi is 10 cents. No minimum purchase. Initial liquidity will be done in stages in order to limit steep price appreciation. I think this coin can go, I think can fly. But don't listen to me, guys. I'm a aficionado, I'm a crypto head, you should do your own research. Again, it's our hard-earned money. Don't throw it. Do your research. Go and read the white paper. Think about it. See how it makes sense. Join their Telegram channel. Ask questions. I can't stress enough. I've seen a lot of people lose money. And guys, we are in a bear market now. It's okay. It's fine. It happens. These things happen. The crypto is like that. So just hang on. This is the team. This is the executive team. Before I leave, I just want to quickly show you. So these guys have their financial specialists, and one more guy. This gentleman here, Valentin Dimitrov. All right, he has gained experience through his work for European Parliament, and all that. So these guys have connections, right? So yeah, so please take a look at this, and this is a great project that I'm bringing you. Please like, please share, please subscribe, please hit the bell notification icon. Guys, I am trying to bring you the best projects. Don't come in late, right? This is early. This is as early as you can get. Okay, guys? So I just want to say thank you and namaste. Please support me to grow my channel. Please like, share, and subscribe. Thank you.